Welcome to Exchange Rates UK TV. It is the 26th of July 2021, 6:48 p.m. Eastern Standard Time. So Bitcoin, unless you've been under a rock, we've had a pretty good rise in it. Started with the open and had a 14.5% gain at the high. Could that go higher? Sure. But in roughly an hour and 10 minutes, a new daily candle will print. When you look at the futures data, so Bitcoin right here, this is the futures contract by the CME. It was up at one point 17.9%. Actually, it was higher. Actually, this discount that. This was up over, I think it was close to 30%. If you look at the close of over 20%, it was up 25.75%. Pretty substantial move, and then it's actually gapped down half of that way there. One of the things I've been preaching about, I think, ad nauseum, is the existence of bearish divergence known as hidden bearish divergence, which is a form of divergence that indicates that an up move that has occurred in the short term is about to end, and we're likely to see a resumption of the broader downtrend. And those hidden bearish divergences are only valid if the prior trend was down, which it was. And you fast forward to today, where we've had 6 consecutive days of closes above their open, and the volume has been relatively low on all of those days, with the exception of today. And on that next day of spiking higher, you see a ton of volume pour in. You wonder, is this a bear trap? Is it a bull trap? What is happening? Well, when I look at this kind of movement, I want to know a couple things. The first is, where is resistance, if any, price-wise? Is there any within the Ichimoku system? And then, are my oscillators indicating anything may be overdone? So that's the next question. So if I look at the weekly chart really doesn't tell me much. The weekly chart actually shows me that there's really no resistance up above, with the exception of this 382 Fibonacci level. But what I do see on the weekly chart is something pretty glaringly obvious, and that is the hidden bearish divergence that exists. You see the composite index crossing above its slow average. But when you look at the peaks, especially the one back here, you'll notice that it is lower than where we're currently at. And when you look at the price, so the current level of the RSI is higher than the peak back here. But when you relate that to the corresponding candlesticks, look at where this candlestick is at this peak versus where the current peak is and that candlestick. It's significantly lower. That is called hidden bearish divergence. And that is a warning sign of prices returning to lower levels. It's not certainty, but it is a warning sign. And then I like to look at the monthly chart. What is the monthly chart showing me? Well, the monthly chart is showing me that there's resistance within the Ichimoku system at the Tenkan Sen. All right, when you look at June's monthly candlestick and then you look at July's, they're pretty much the same. There's not much of a variance between them. The bodies are really constricted between the Tenkan Sen and the Kijun Sen on the monthly chart. Okay, they're pretty sandwiched in there. So there's really not a whole heck of a lot of things to look at there. But there is some creeping hidden bullish divergence developing on that monthly chart. It's very slight. And those are the kinds of hidden divergences you want to see, the kinds that are very, very, very slight. Those often turn into good ones. But on the daily chart, this looks very much like a continuation pattern south. And if I bring that back where the RSI is at here, I've put down in the RSI Actually, let me change this to the bear market levels, 30 and 20. So the overbought conditions in a bull market in the RSI are 55 and 65. We've certainly blown past the 55 level. Now we're testing 65. That level is showing up while we found resistance against the 382, and there's hidden bearish divergence present. That is a warning sign of lower prices. And where would it be going lower? Again, 24 to 27K is that initial target zone. But again, the bearish side of things is the most obvious one right now, to me at least. But there are some hints of bullishness here, especially when the lagging span, if the lagging span closes above the candlesticks, that's bullish. That's very bullish. And given that price itself, if it were to close here, it's above the Tenkan Sen, the Kijun Sen, and Senko Span A. I mean, and you're about to have the future span A cross above future span B. There's a lot of things setting up for a bullish drive, but at the present, it still looks very much like it's going to go lower than higher. But keep a close eye on it. These are the kinds of market conditions that are really reflective of what happens when something is trading inside the cloud. It is volatile, it is indecisive, it is whipsawy, it is all over the place. And these are definitely good examples of times when I don't like to trade, because there's no real clear path. There's so many variables that point to up and down being equally strong, but in my viewpoint, it still looks more likely that it goes south than north. Thank you for watching. From All the Shared Exchange Rates UK TV, please don't forget to like and subscribe.